电脑在哪里？电脑没操作。
调整到这里。
有没有全关？
全关可能太暗。
啊？
全关可能后面太暗。
哇，经常看到。Can you guys see this?
Yes, I think it's in Chinese though.
It's a little bit blurry for me.
Okay, let me zoom it a little bit.放到这里。直接放大好了，因为直接放大。
对吗？然后下面这样拉的。
诶。Okay. Okay. This is the article I wrote February last year. It's in their line, in the line group.
Yes.
Okay, it's also in your line group. Sorry, it's Chinese. Okay, but the basic idea about this article is the COVID-19 under the COVID-19 pandemic, Wuhan 疫情, Wuhan 肺炎. At that time, we called it Wuhan pandemic because at that time there was no formal name for this virus. Okay, so at that time I wrote this because the market collapsed. But as we understand, the fundamental for a lot of corporations, they were not affected. So it's actually a more a panic driven dumping. Okay, so I called it as a panic investment. Okay, 恐慌投资学. What is the English that I give you? Paninomics. Okay, so I don't want to go through the whole article, but for the figures, it's probably easier for you to understand. If you read Chinese, please do it on your own. But for this, okay, this is the important part. Okay, so it's also on my textbook. It's a little vague. This is the fundamental value. Here, this line is fundamental value. Okay, as we mentioned, we can use the direct capitalization, right, to find the fundamental value. Whether if you want to use a required rate of whatever percentage suitable for your risk aversion level, okay, you can find it. Okay, it's more stable. However, the market price was volatile. The market price was volatile. Okay, it could be caused by the too optimistic. Okay, or we call it euphoria. Hey, everybody think the world is so wonderful. Okay, everything is going to be brilliant. Okay, even though you walk on the street, the shoe shining boy. Okay, it's also recommend you to buy all kind of the stock. Then you have to be cautious. Everybody is going crazy. Or as addressed by Greenspan, Alan Greenspan, is more like a irrational exuberance. You have heard of this term, 非理性盲目, irrational exuberance. Okay, everybody went crazy. However, when you find when after the downturn, okay, you found that the market price go below the market price, fundamental price. Okay, that means the market price is much cheaper, or it's a good deal for you to put your money in here. Okay, then you have to be prepared. Okay, to make investment. Okay, especially what you can see when there is a panic. A lot of people, they don't even think what the stock, the company is. They will dump the price. They will dump the stock. Okay, so remember this. Okay, and next is the 下一篇. Next is the inflation. I wrote on this web page, I think 3 months ago, about the pandemic caused the inflation. 就用过去，你把它打开。Okay, so we have to be. So the title is, we have to look at the inflation caused by the pandemic. As I mentioned, it was caused by the shortage of the supply because of the lockdown or the quarantine. The labor force reduced. Okay, so the supply reduced, declined. Okay, so according to the definition, too much money chasing too few goods. Now is a perfect timing for inflation. Too much money, right? After the QE, and then too few goods is a pandemic. Both match. Okay, so read it on your own. So look at the very bottom. Okay, so we can look at the inflation. Now, I think that was 3 months ago. Okay, that was 3 months ago. It was 5% in the United States. And you can check the most recent inflation now is even higher. Okay, that was in US. I think, as I heard, it was probably over 7%. And in Taiwan, in September, it was only September, it was 3%. 3%. Only this month, 3%. Plus, the oil price rose to over 80 US dollars per barrel. The shortage of the supply plus the oil price to surge. I don't know what is going to happen next to inflation. So, these two articles. Okay? So, of course, in February last year, I also entered the market at the time. So I did not just write article, but also action. Okay, I will also show you how to do the investment then again later. Okay, let's look at the PowerPoint. No, so these are the teaching material these 2 weeks, maybe even longer, because every subject will take a little while for me to show you.
Nó chạy nhưng mà
对，我现在是让它起立。有一个。Okay. Yeah.
这是第一页。
Yeah. All right. So in this PowerPoint, we actually cover some subject, okay? Okay, our gold price I showed you, right? Last week. I was going to show this PowerPoint last week. And the basic finance, okay? You probably never took courses of finance or investment. So this is a good time for you to build up your foundation. Okay, so we will also use the financial calculator, okay, for you to find a quick and precise answer. And of course, a cash flow analysis or a financial statement analysis is also important. Okay, you probably never took accounting before. Okay, but it is okay. Okay, I will show you the basic idea about financial statement, like the balance sheet, okay, the income statement and the cash flow statement. And we will need to create a cash flow statement on our own, be able to do this. Okay, because after this we will show you how to do the capital budgeting. That means with a certain amount of the capital, you want to determine whether it's worth it or not for you to put your money on a certain project, whether if this is financially feasible. Okay, we can call this a case financial feasibility case. Okay, so it's okay if you never took accounting courses. So you don't want to become a CPA, accountant. You want to be a financial analyst or investment analyst. But if you want to become a CPA, you need to go to the Department of the Accounting to take more accounting courses. Okay? And then we summon other analysis. We want to do the investment decision, which is the capital budget. And then we will do the case study. Okay? A huge, large scale case study, which is maybe hotel analysis, hotel development analysis, or theme park, or commercial, like a retail analysis. Okay, so this is the gold price I showed you last week. Just skip it. All right, so this is a basic idea about the finance. Okay, so for the first one, which is easy, and until next week we will have the financial calculator. We will give you some real number for practice. But for this one, I think we do it gradually. We do it from the basic one and then gradually develop it. Okay. Let me show you the basic idea, and then you go back to review, and then you take a look about whether if you can understand it or not. Next week we will give you real numbers together with the financial calculator. Okay? And if you have the financial calculator, please bring it with you next week. We will start showing you how to do this. I also have my own. So first one is present value versus future value. I think this is the easiest one. You deposit 100 in the bank, and the interest rate is, say, 2%. So after 3 years, this is the multiple compounding. We call it compounding. So this is, say, 100 is the present value, and 2% is the annual rate, and 3 years is the deposit period. And then you will get the future value. So this is called compounding. Maybe you can check the factor. Okay, but if you have the calculator, it will be easier for you. Okay, so this is it. This is called compounding, and the opposite, okay, is discounting. That means if you want to get say 1 million to travel the world. If you want to get 1 million to travel the world, okay, with say 3%, okay, and say after 5 years, and how much you need to deposit now? Okay, the question is like this. Okay, if you want to get a certain amount of the money in the future, say 1 million in the future, what is the interest rate? Say 3%, and 5 years later, after 5 years, you want to travel the world with the 3% interest rate deposit. How much you need to save in the bank, put your money. So this two formula is just to sweep the factor to the other side. Okay, so I'm going to just show you these two easiest ones today, and I will go through the next two or next three for next week. So I want to leave you guys to have a basic idea on these formulas. So, but I don't want to just give you formulas and then let you to practice. No, I will show you how to derive this. Okay, and then how to apply it. Okay, and then you will have the impression in the future, not just to memorize it. You don't need to memorize any formula, but just remember these two are the easiest one in our daily life. I just show you, and then take a look at this, the following two. Take a look at these 2 pages, okay, and then not to remember. Don't worry about the formula, but what about the annuity or the its relation annuity to future value or present value? Okay, so we will continue to this page. Okay, so this is the cash flow analysis. So before we go on the cash flow analysis, we probably want to start from balance sheet. I don't think I have the balance sheet here, so we will probably skip this again. So let me start from balance sheet. So I know a lot of you never took accounting before, so let me briefly introduce. And in the future, if you become a CEO, a president, or even just an investor of one company, you need to be able to understand what the performance of the company. And the easiest way is through their financial statement. And there are 3 basic statements you need to be able to understand or even to develop, which are, as I said, balance sheet, income statement, and cash flow statement. So let me start from balance sheet. So you usually use this as the T account. We call it T account. Okay? So this is asset side, and this is liability. And with the equity here. In Chinese, we use this as a 负债。OK， 业主权益。or 自有资本。And this is 资产。OK， 自有。Okay, so usually we know the two sides of the T account need to be balanced. Say we need to have say 100 million, or this is 100 million. But with this 100 million, okay, say on the right side, this is from out of your own pocket, or you borrow from the bank. Okay, so you have the short-term borrowing. Or long-term borrowing. Or we can call it, if you maybe you issue bonds, or you owe others, how much you owe others. Okay, and the short-term borrowing, you call it, they say note or bill. Okay, so longer term we call it bond. And for equity, you can issue stock. So you can issue stock. 股票。Okay. Or for stock, you will have. So now we need to introduce a little detail about the stock. Common stock. Versus preferred stock. Oh, okay. This is called the 普通股. This is called the 特别股. So, what is the difference between common stock and the preferred stock? Anyone wanna?
Preferred stockholders have no voting rights, whereas common stockholders usually have a voting right.
Can you speak up?
Preferred stockholders usually do not have a voting right, whereas common stockholders have a voting right.
Hold on, good. Hold on. No voting right. With voting right. Yes, good.
And then there's a dividend yield on preferred stockholders.
From common stockholders.
Yeah, usually preferred stockholders get a dividend yield that is either higher or they get one, whereas common stockholders do not get one or get a very low dividend yield.
What do you mean dividend yield? What about common stock?
It's usually small or not at all. It's the same as if the company, when it gets liquidated, usually preferred stockholders will get paid out first, and then the common stockholders will get paid if there's still money left. So as a common stockholder, you have a voting right, and you do get payments, but there is a chance that if the company is running bad, that you might not get any money.
It's up to the performance.
Yeah.
Right? So, you get a dividend.
So basically, there's just a priority. Like preferred stockholders have a priority over common stockholders.
As making profit. How about this? Right? For the common stock. So TSMC, why TSMC is holding up there, 600 Taiwan dollar, which is per 1,000 stock in a piece of the TSMC. So 600 times 1,000, which is 60万. 600,000 Taiwan dollar for one piece of the stock certificate, because one piece include 1,000 shares. Okay, 600,000 Taiwan dollar, which you can buy a car. You can buy a car, good car, because they give you $5 dividend every quarter. Hey, TSMC is giving you dividend quarterly. Oh, so with this, you, as they make it, is making profit. Only making profit. If they are not making money, sorry, no. But what about preferred stock? Does preferred stock get dividend? Sheila,
Yeah, they do.
how do they pay the dividend?
Based on a ratio, there's like a calculated on the dividend and price of the stock. So the dollar amount of a dividend.
Usually, when they issue the preferred stock, they gave you a fixed ratio. Usually, they give you a fixed dividend. Fixed, so irrelevant to their performance. So it's more like a fixed income, but it's dividend. It's stock. Okay, so what about the timing of issuing preferred stock? What about the timing? Why corporations issuing preferred stock? Anyone? Zhuwen, I think you are interested in investment. Why issuing preferred stock?
Like Global will go into common stock, they will
Was it?
会被说中文吗？
Ah,
就是它要上市上柜这些
going public.
Yeah.
You wanna go public, but you issue the preferred stock. You issue common stock. Right? Anyone?
Why they're attractive?
Was it?
What is the question?
Why issuing common stock?
As a
Why
company?
issuing preferred stocks?
Why a company would issue preferred stocks?
Yes.
Because mostly they are callable, which means you can convert them. So when there's a fixed price and a company does not want like the price of a preferred stock to go much higher, they could call the stock basically, which means it will become redeemable. It's convertible, and for a company, because as an investor, it's attractive to get a preferred stock. But for the company, it's good because they get money, but the stockholder does not get a voting right. So the power and rights of the company retain with the company holders, stockholders. Right?
Yes, it doesn't have the voting right, but whether it can vote or not is not an issue for.
No, but I mean, like, it is callable and cumulative.
Yes, it's callable. Yes, it's one feature, but not necessarily I issue it because it's callable. It's true, it's callable. Yeah, you are talking about the characteristic of the common stock. I mean the timing. Why
like the
issue? Let me give you an example. In Taiwan, there is a company well known, and you know it, issued preferred stock. You know which one? Everyone knows. Which one? Which company? TSMC?
Sure.
I don't know. I don't know about TSMC whether they issue preferred stock or not. Probably not.
Oh, do you mean like when a company is in, like, to avoid debt? That's why you issue preferred stock? Is that?
Oh, we are getting there. Not avoid that. They
maybe
they had
you want a higher equity.
They had too much debt. Yes, good. Yeah, you're true. Because they had too much debt, and they had to avoid higher debt ratio. And the banking industry wouldn't lend the company more money. They cannot get more financing. Which company in Taiwan issued the preferred stock, and everybody knows? You know? Everybody knows which company. Taiwan High Speed Rail. Taiwan High Speed Rail. You know, high speed rail in Taiwan. So let me tell you the story. You will know why it's issued. So Taiwan High Speed Rail, they lost a lot of money in the beginning. I think now they are making money. And we can use the financial statement to illustrate the case of high-speed rail. Okay? Because they didn't make a lot of money, they didn't make profit, and they didn't issue dividend to their original stockholders or the original investors. So they were in need of more capital investment, but they could not find money because original investors, they complained, hey, I never get any penny of the stock dividend. How can I get the money out of my pocket to invest on you? No way. Plus, if you wanna issue more stock, outstanding more new stock, it's going to dilute the voting right first, and the second, no one wanna buy you. No one wanna buy your stock first. The second, as Sheila said, too much debt, so they cannot find financing. So, no place to find new financing of either common stock or original investors or from the banking industry, because they already had a very high debt ratio. So they issued the preferred stock. This is a good example. Okay, so this is for stock. If you go public, and in a certain situation, if you have a land price, if you have a real estate, if you have the assets to appreciate, okay, and you can put a certain of amount here. Capital 资本公积, I don't remember what the capital appreciation. What is the English here? Excuse me. Capital, whatever in appreciation. My book I had, so excuse me a moment. 资本公积的英文名字 additional paid in capital. What is this? Additional paid in capital. That means with 1 million, this is 1 million. Say if you had to buy the house. Hold on. Let me. I have to introduce the asset part and then come back to this one. So our time is up. Okay. So let me kind of wrap up here. So you had say you want to collect 100 million of the capital. That means you want to collect say 60 million here and 40 million here. So you collect 40 plus 60 million to form your capital, the total of the capital. And then here you have this much money. And then you want to put this money, you allocate this 100 million to somewhere else, So you want to probably put in some cash. So you heard from Professor Lin that TSMC is a good stock. You put your money here into TSMC. And you also do some lending activity. if you are a bank or someone want to borrow money from you, so you have a certain amount of the accounts receivable in the future. We will introduce this more. And of course, with this, you want to have your own office, okay? And then you need to buy the computers, machinery, facilities. And then maybe you want to buy an office. We call it real estate. This is more or less the combination of your assets. And the next time we will start from this side. So, take a quick look on our PowerPoint. It's the preview of our teaching content. And then, if you are interested, go to search the balance sheet, income statement, and the cash flow analysis. I will also give you another article for next week reading. Okay? See you next week. You guys, 4 people. Adios.
See you next week. Thank you. Bye.
Bye.